Hey traders, welcome back to another exciting episode of Market on Mic. It's your guy Daniel. Market on Mic is a podcast that keeps the trading talk clear, real, and useful whatsoever. And I'm not alone on the podcast. As usual, I have my amazing co-host Natasha. Welcome,
Yes,
Natasha.
guys, and as you already know, I'm Natasha. And today we are not just reading the charts, but we are actually checking the vibes of the market. We talk about stocks, gold, oil, currencies. June is actually moving fast, and we're actually going to be breaking this all down.
Yeah, it's going to actually be an exciting time. This episode, we're going to be looking or breaking down the market, what has been happening since the beginning of the month, how the market has been moving, what has been moving the market, the opportunities that has been presenting themselves, and what has been the highlight of the month. All right, and we're looking at from inflation numbers to what the Federal Reserve are planning. If you don't know what the Federal Reserve is actually, the government of the bank, that's the central bank in the United States, which is the Federal Reserve. So the governor of the Federal Reserve is actually going to be reading the minutes of interest rates, for the United States, and that has been the highlight of the month, and also inflation numbers, like I said previously, but also what has been happening on the US stock market or the US futures market, from the Nasdaq to AI and all of that. So I hope you're ready to jump in, Natasha.
Of course, guys. So let's actually get a quick spin, that is the market snapshot. So we're actually going to be looking at what the market is saying right now. Like we said, this episode, we're looking at the June hit, what we've been experiencing this month. All right.
And before you go into that, if you look at how June has been in the market, it has been a little not so clear.
It is actually the opposite of last month. In May, we saw movement. We saw
a whole lot of volatility.
And now in June, we expected it to continue in June. But we already know that this market has different things. Yeah, exactly. It has a mind of its own. And of course, it has things that are affecting it. I'm sure if you've been on the market, you're hearing about one tension here. We're having the Federal Reserve coming out. That would be 7:30 on Wednesday, 7 p.m., 7:30 on Wednesday. And, these are very much key indicators that actually lets us know what market is doing. All right, quick fire round. So here's what the market is actually seeing right now. So I'm sure if you're trading your stocks, your S&P 500, it's around 6,120, right? If I'm not mistaken. And we still see it's actually still floating near all-time highs. And I think from the very beginning, S&P 500 has been one index that has been very profitable, irrespective of the craziness happening in the world.
Yeah, true. The S&P 500 is one of the major leading investment indicator in the United States. So they usually put hand in hand. Anytime they're looking at investment portfolios, S&P 500 always tends to come up.
Of course.
So it has actually is always.
People that are actually trading stocks actually build their portfolio around S&P 500.
Yeah, because it's like 500 most profitable companies in the United States.
Yes, guys.
So why not?
But let's not forget, S&P 500 is not just what we have. We also have the Nasdaq, right? And we see it holding strong at about 19,850. And you already know that this particular stock is just driven by the tech.
Yeah, the tech enthusiasm.
Yeah.
And tech has been booming lately.
Of course.
So just been
we have seen, ever since as far back as 2020, we have seen tech just go. And at some point, you're like, how crazy can it get? But there's just always something new. And we also saw some particular interesting stocks. We saw Apple. It steadied at about $202, bouncing back from the weekly draw keynote.
Yeah, the Apple they've been suffering some tariff threats.
Of course.
Yeah, from the United States, because Trump has threatened them now, threatened Apple that if they don't bring their base to the United States, So, and that literally caused the stock price that was sometime last month to drop. But we've been seeing it, I think they've been coming to some level of agreement, and it has been steadying back at around $202 thereabout.
Okay.
So it's been quite exciting too.
That's great. So we've also seen Microsoft and also Amazon. And we saw Microsoft actually slight bump to about $485 and also benefiting from enterprise AI adoption. We also saw Amazon creeping up around $202 $20 as prime day anticipation view.
Yeah, so the US stock market has been quite booming. AI anticipation or AI enthusiasm rather than some key AI or prime anticipation, AI adoption and the likes has just been gaining a whole lot of momentum. And so inflation. So inflation has also been a mixed bag in the United States. Although we've been seeing inflation, the rate at which the inflation is increasing has very much reduced. So the latest CPI that came out in May came in at 0.2%, which was actually showing persistence, but the core CPI cooled slightly. And also the CPI that came out last week actually showed that inflation is actually, it's not, the pace at which is increasing is very much reduced at the moment.
True. And I'm sure that if this is not your first year trading, maybe you've been trading for a couple of years now, you'd realize that these fundamentals, we're talking CPI, FOMC and all of that, they're no longer giving that spikes to the market as usual, but it doesn't mean they are less important.
Yeah, not at all. They're not less important in any way, because they still give a whole lot of indicator to investors on if they should still have confidence in the dollar or they should be skeptical and move their funds somewhere else, probably to the commodity market or the crypto or stock market per se.
Gives you the ring to know when to diversify.
Exactly.
So I'm sure that for those of us, especially me, that we really do enjoy trading fundamentals, we want to be able to double our account size within seconds, and we want to take advantage of all of that. But now this year we're wondering what happens to CPI, what happened to FOMC, why is PPI not moving, why is it that when those news are being released we don't really see any movement in the market? Doesn't mean they've lost touch, because trust me, like I said, these are economic indicators that give investors where next to put their money, and you still need to pay attention to it so that you know how and when best to diversify.
Yeah, that's true. And the inflation just points out that people are spending less. If you're looking at the core retail sales or consumer confidence, you see that the people in the United States are actually spending a whole less. But the markets has actually still been vibing, and there has been a lot of bets on soft landing despite the data in the United States, and it has been causing a whole lot of switch in the United States. All right, without further ado, let's go a little bit more to see how the currency and the commodity market has been.
Yes, guys, don't forget that we're not just talking about the stock market. Everywhere on the market, if you've been on this market, that there's money everywhere. So we just want to see how the things that have happened within the particular month of May has trickled down into June, and what we should be expecting in June. So what's up with the currency market?
The dollar has been on, I think the major issue with the currency market presently has been the
strength that the dollar has over every single one of them.
Yes, the strength. And also, the tariff uncertainty has been making the market a little bit silent.
Yes, I think apart from JPY that probably has something going on, when you check other major economies like the euro, the GBP, that the strength of this particular instrument is just determined by the strength or the weakness of the dollar.
Yeah, true.
Like nothing is really happening within this economy.
Exactly.
They are just trying to put their head above water with all the tariff or the craziness that is going on. And we just have the USD deciding, okay, today you're going to go up, today, no, you're going to come down.
Yeah, because it's quite crazy, because if you're not careful, the market just switches anytime it wants.
Yeah.
Last week, we saw the dollar got having a lot of weakness. We were seeing Euro USD trading up to 1.007, 1.075. We're seeing GBP USD getting to as high as 1.268. USD JPY falling to about 157. We're also seeing USD CHF dropping also, and that basically was because the dollar was weak. But before you know it, earlier this week, we're seeing a lot of recovery. You understand? So if anyone has still been betting on further sales, like that would be in some certain level of loss. So the market has just been a little bit unstable. The dollar hasn't been having a lot of strength, hasn't been moving so much. And another thing is, what caused that was the tariff uncertainty. Then also everyone are having their eyes on the Fed FOMC for tomorrow, which is actually going to give a whole lot of direction to the dollar.
Yes.
Exactly.
And that could actually change really fast.
Yeah, it could change a whole lot of things in the blink of an eye.
Yes,
so you
guys,
want to have your eyes on that, on the result or the outcome of the Fed meeting tomorrow.
Meanwhile, don't forget that it's not just a currency market, it's not just the stock market. We also have our commodities market, and we've seen gold and silver are doing their thing. So we've seen that gold is actually chilling at about 2,340 thereabouts per ounce, and it's been finding support after last week dip. In fact, I think beginning of this week we've still seen some major dips in gold.
Yeah, we've seen
Right?
some major dip.
And yes, silver is also riding around about $30, and it's actually showing more volatility and catching some industrial demand buzz.
Yeah, silver has had, one of its major rally this year.
Yes.
This month. Yeah, it's rallied crazily at the earlier part of last week, and that was due to the ongoing war.
Of course, that is. We are seeing the industrial
So,
demand
I
for
think we're
this.
going to talk a little bit more about when we go a little further. That's one thing we should actually look out for. But ideally, that war should actually, one way or the other, give momentum to the gold market. But we're not seeing that.
Well, just like you said, we're seeing all of these tensions coming up, which of course we're expecting to see or build up in gold. We're expecting
Yeah.
to see, and yes, we're seeing a major bit of momentum, but it doesn't mean the market has changed. The market can just be shedding off some
Yeah.
lightweight to only just rally back
Well,
up.
that's actually very true.
Yes,
It lets some
So,
certain level of retracement for pullback to the upside.
exactly. And we've seen that both silver, gold cooled off recently, but it is still up high year over year,
Yeah, true, yes,
especially
very
with this
high.
geopolitical tension.
And gold is still trading about 3,300
Exactly.
which is still quite
Yeah,
high.
so whatever maybe pull off we're seeing right now on gold might just be the market trying to gather momentum for some rally back up. So, guys, one thing we're saying is you do not want to just go into the market based on what is happening, right? You want to be able to position yourself really safe,
Yeah, true.
right? You want to be really
So
safe.
this period, you want to be very cautious because
Exactly.
the market is not showing so much clear direction, but it's
Mhm.
still moving. Right? Not showing, yeah, we're still moving at the moment. So I believe that after tomorrow, after the Fed interest rate, or after the 17th or the 18th rather, which is the Fed rate decision, we're going to see a whole lot of clarity on
Yes.
market direction. Beginning of the month has just been a little bit shaky, but definitely after the Fed meeting, we're going to have direction. And we won't forget the oil market. It
Mhm.
has had a crazy rally back, a crazy recovery, because since the beginning of this year, the price of oil has been depreciated. The WTI, all the way from $78 per barrel, dropped to about $40-something per barrel, which is crazy. Yeah, and
that
that's
was
because
so good.
of our dear Donald Trump. But due to the Israel-Iran war, so much
Straight up,
bounced
gap
back
up.
crazily. Right,
Yeah.
oil getting back from about $40-something per barrel back to 78, where the whole move started from at the beginning of the year. It's actually been crazy, and thanks to OPEC discipline, the strong demand, the Middle East drama, that's the Israel war, crazy.
Trust me, it's a whole lot of drama.
Yeah,
And Donald even saved us from another one. We almost saw the India and Pakistan.
yeah,
right,
so that
but-
was
Donald, he's not a man of war. He's a man of peace. So really, it's because even the Russia-Ukraine, which we think, okay, we might be coming to an end, we're still seeing tensions in that area. And definitely, we're talking oil, we're talking gold, we're talking silver. If there's one thing you buy early, right? And silver looks really good. If so, you can take a time, check out the silver market, see how you can also benefit from that. So you know what they say, guys, when oil sneezes, energy stocks catches a cold or a rally. And we've actually seen some impressive gain in the energy sector lately.
Yeah, and it has been global. If you even look at the Nigerian or that's Rwanda or maybe energy stocks globally, you will see that it has been gathering some level of momentum just because of the Middle East drama.
Yeah.
Let's go a little bit further. Now, let's look at some of the top stories that has been happening for this month or for this week, or what we should expect for this week. So we still know that the Israel-Iran war is still going on.
Yes, guys. So
Yeah.
what Daniel is saying is that as a trader, these are the headlines you need to watch.
Yeah, so these are the things you need to track for the week so you don't lose focus of the fundamental aspect of trading.
Sure,
So
yeah.
the first thing is the Federal Reserve, which we're expecting to be released on the 18th of June, which is on Wednesday. So you should keep your eyes to the screen and your ears to the ground for the outcome and result of this particular event. Is going to cause or give proper direction to the market. So will they hint rate cuts later this year, or will they maintain a higher for longer stance given the sticky inflation? So what I mean is, would they be looking to cut the rate or give a hint to when they'll be cutting the rate, or would they keep the rate steady, or even have plans on hiking the rate? We're not going to know until the minutes are read on Wednesday. And also be having some of futures contracts that ending, because this is the last month in the first half of the year. So we're going to be seeing a lot of contract and options. So we call it a quadruple weekend. So if you've not heard that before, you heard it first on Market on Mike. So it is when a lot of contracts, futures contract, maybe oil contract, they tend to end, and before people would want to buy back again. So we're going to having those expiry on Friday, which is on the 20th of June. So expect a lot of volatility in the stock market. The stock market. So expect a lot of volatility. So also oil prices are rising due to the Israel-Iran war that's actually going. Keep that in mind. So you may be looking, or you may want to start shifting your focus towards the oil market. Look for some good rally to the upside. So also we are seeing some weak Chinese data. We're seeing also, you want to keep your eyes on the upcoming G7 summit and also the ongoing US-China trade talks. Although I think they came to a conclusion this month. Yeah, they shook hands on, although so much detail was not given out to the public, but they came to an agreement on the tariff. That's the US-China trade talk. So that's been quite an exciting month, and these are the things you should actually look forward to.
Yes, guys. So translation of everything Daniel just said. Stay sharp. This event can actually change the direction of trades in seconds, and a quiet market can turn really loud, and it can actually do that really fast. And the market is particularly sensitive to any hawkish surprise from the Fed.
Oh God, if they by any chance give a hawkish statement or a hawkish look.
Yes.
Wow.
So let's talk about what to actually do right now. So probably you're hearing all of this and you're like, okay, so what do I do? What do I do? So this is it. As a trader, this is what I'm actually going to be doing this week, right? This is what I'm thinking now. One, we're going to stick with the winner tech, right? Tech is still leading, right? Especially companies positioned for AI growth.
Yeah, we're talking
about
that
AI is still at a very, very early stage.
Yeah, it's still very early.
Very early. And I'm sure that you might have said, but this market has bought for so long. Yes, it really doesn't mean, because trust me, I'm sure that we've seen movies and we've seen how far AI can go, right? We're already talking about
companies. I was thinking about companies like Tesla, Nvidia, a whole lot of companies that are having a whole lot of future plans for AI in terms of innovations, for example, Tesla, they're planning to unveil their robotaxi. That's their robot taxi. That's earlier or later this month. Those growth or those innovations are actually going to keep causing some huge momentum to this market.
Yes, guys. So like I said, you want to actually position yourself for AI growing companies. That is, AIs maybe companies that are still very young. But even the ones that are good, just like Daniel said, Tesla, and we can see that it's even already, AI is also going as far back into the energy market.
Yeah, true.
So it's going into the firm market. So anything AI, guys, you want to actually position yourself there. Now, wait for the Fed before jumping into dollar trade. And as their forward guidelines will be key. Yes, I already know that we traders will say, when Powell wears a blue tie, okay, we already know his stance, right?
Yeah.
But guys, this is very tricky times in the market, because let's not forget that we have a president that is calling for rate cuts, and we have a central bank governor that is not in support of it. This is politics, and we don't know. They would always come to a conclusion. So you do not just want to jump assuming that Powell is going to say, yes, he's a hawkish guy. Even sometimes hawkish can become dovish, especially if it's going to be great for economy, right?
True.
So you want to actually position yourself, wait for the Fed before actually jumping in. And please, when you're looking to trade gold oil market, wait for breakouts. Especially if the news actually hits up. You want to actually wait for breakout, especially any escalation in geopolitical tensions. You already know that oil and gold are mostly affected by what is going on in Iran, what is going on in Russia. Russia has been like one of the Russia used to be the biggest producers of oil till they got their sanction. And right now they're still selling oil, but not with the US dollars. So you want to actually wait to see how this thing plays out before you jump into the market.
Yeah, true. If you're more cautious, you want to cash. Cash is your position. Use stop losses, guys. Very important. Your risk management is very important. So use stop losses when you're trading. Look out for safe setups, maybe defensive stocks or ETF that offer stability amidst market volatility. That's if you're a long-term investor, you want to be. But if you're a trader, you want to make sure you're using your stop losses, tight stop losses if possible.
We spoke about stop loss in our last episode.
Yeah, we did. So if you are listening to this episode,
risk to reward,
and you've not listened last week's episode with Uncle G, you should go back and listen.
Go and receive wisdom.
Yes,
on
go
how
and
to
learn.
manage your risk to
Exactly.
reward.
So if you're thinking how much profit
Should
I achieve or target,
or how much should I be risking?
Exactly, how much should I be risking? You would get that information in our last episode. Go back and listen to it. Right?
Okay.
There's no need to force a trade in this particular period. This isn't the time to be a hero. It's the time to be smart. So you want to be smart with your trades until there's a clear direction in the market.
Yes, guys, and don't forget, the market rewards patience as much as action.
Yep.
So know when to chill and when to move.
Yeah.
Capital preservation is paramount, right? Don't forget, without no capital, there's no profit.
Yes.
Right?
Save your capital. Right?
So you don't just want to go into the market assuming. This is not a time for assumptions.
Yeah.
This is not a time to be way ahead of the market. This is a time for you to just follow it and just ride with it.
Yeah. On also the crypto market, before we end this particular episode, the crypto market has just been a little bit silent, and due to the escalation of the war, nothing so much happening in the crypto market. So what has been bubbling this period is the oil market. So gold has been falling recently, oil market has been rising crazily. We've seen some level of strength in the dollar. So that has been the highlights recently. So you want to either looking for long opportunities on the oil market, because this war doesn't look like it's going to be de-escalating anytime soon.
In fact, I actually think, not because of anything, but I feel the rest are going to see more outbreak tension in quite an amount of places, and we're going to see them, and that's actually what makes this market very volatile. So if you're still not here on the market, it's a good time to jump in. Trade smart still. Try to figure it out, because we're going to still be having some tensions coming up. But that's what I feel. And we're going to just see how that plays out.
All right, yeah. So that's it for June check-in on Market on Mike, guys. Like I said, you want to look at what is happening in the stock market, how gold has been cooling off, oil is bubbling, the Fed are just holding the mic for their big announcement on Wednesday. So you want to look out for all of those hints on your next trade. So if this helps make sense to you, or you want to share it with your trader friend, you want to share it with your colleagues, with your families, even your enemies, share it with them too. Really? Did you just see that?
We are all here to make money, so we can allow beef.
Okay. So Natasha said it. Share it with you understand. Yeah. So follow us on Market on Mike, guys, on Instagram and also on Twitter also.
Yes, guys.
And subscribe to the channel. Like this particular episode if you got a whole lot of value. Put that in the comment section, and if there are one or two things you want us to talk about on our next episode, and stay locked in. Yes, stay locked in,
because
guys.
Episode 18 we might be talking about the media moves. Let's not forget that every timing, like there's timing on this market, and every timing has its own move. So please, guys, share with your friends, follow us, Market on Mike, stay locked in. And of course, you want to adjust your game plan, just stay in tune, especially after the Fed's latest take. And after we see we're going to have some really good directions. We might even see a little bit of May.
Yeah,
the whole
this kind of volatility that came with me.
Exactly. So until then, guys, keep it smart, keep it simple, trade.
Yeah, guys, trade safe, and see you in the market. Bye.